The Bank of Canada's rate cut and its impact on the Canadian dollar. The Bank of Canada has just cut its key overnight lending rate from 3.25% to 3.0%, marking the sixth consecutive rate cut. This move was widely expected, but what really caught the market's attention was Governor Tiff Macklem's warnings about economic uncertainty. Here are some key takeaways from the bank's latest projections. Inflation is now expected to reach 2.3% in 2025 and 2.1% in 2026. GDP growth estimates have been lowered to 1.8% for both 2025 and 2026, reflecting concerns over potential U.S. trade tariffs. And the central bank has removed its previous rate guidance, leaving markets wondering what's next. Now, how has the Canadian dollar reacted? Well, it initially weakened but later paired some losses, staying within its daily range. However, the outlook remains uncertain, with the U.S. dollar to Canadian dollar still hovering near its January highs. The key risk? Possible U.S. tariffs. The Bank of Canada has openly stated that U.S. trade policy is a major source of uncertainty. If tariffs do come into effect, the impact on Canada's economy could be severe. In fact, Wells Fargo strategist Eric Nelson warns that the Canadian dollar could weaken to 1.70 per U.S. dollar, an all-time low, if the U.S. imposes 25% tariffs. But before you panic, Nelson also believes the odds of such harsh tariffs are extremely remote. According to him, the market isn't pricing in a full-blown trade war because many believe the tariffs are more of a negotiation tactic rather than a long-term policy shift. Meanwhile, the Bank of Canada remains confident that past rate cuts are already helping the economy. Household spending is picking up, and while the labor market remains soft, wage pressures are easing. The big question now is, will the central bank continue cutting rates, or will looming trade risks force them to hit the brakes? So, what does this all mean for you? If you're holding Canadian dollars, investing in Canadian assets, or even planning a big purchase, keep an eye on these key factors. 1. The Federal Reserve's stance on rates. 2. U.S.-Canada trade negotiations. 3. Inflation trends in Canada. That's all for today's update. What do you think about the Bank of Canada's latest move? Do you see the Canadian dollar strengthening or weakening in the coming months? Let me know in the comments. And don't forget to like, subscribe, and hit the notification bell for more in-depth market analysis. See you next time on Navigating the Markets.